Welcome. I am your Polkadot Specialist Var, and today I'm going to go over GPU.net and its new Tokenomics. So if you like this particular episode, please like and subscribe. It'd be highly, highly appreciated. So this is my 5th episode of GPU.net, so part 5. And I wanted to cover this because there have been a lot of changes with GPU.net, and I didn't want the last video to go too long. So in this one, I wanted to cover some of the changes to the tokenomics and some of the stuff I've been hearing within the community. Now, this here is a little controversial when it comes to community, because there's some people that essentially, in my opinion, just really want to dump. So they're really looking at it as a quick flip type situation. And they wanted to be able to get coins from the validators and kind of dump to get their money back, which I understand. Sometimes people are in it just for the return on investment, and I get that, especially in crypto, where it could be highly risky and highly volatile. And there's also the mindset of you want to try to capitalize as much as you can within the bull run. The bull run might be over in April, May, so you want to try to get as many coins as you can before the market crashes. So I do get that. So one of the major differences that ended up happening was they changed how fast the coins come out. Previously, they had said that the way the rewards would go is you'll get your most rewards in the first 2 years, approximately, and then there's a halving. And then another 2 years, be halving, and then another 2 years, be halving, and the rewards will just come. But they changed it where within that first 2-year period, approximately, it could be shorter, it could be longer. It's actually based on activity now. So it's based on activity and blocks and all that other stuff, but not to get too technical. It might not be exactly 2 years. It could be more, it could be less, because it's based on how the workload and how active a particular blockchain is of GPU.net. But essentially now they're ramping up. So as things get busier and busier on the chain, the rewards get more and more and more. So that was kind of the controversy, because people wanted to get as many coins as possible to try to dump, in my opinion. But the team was looking at the long-term health of the project, and they had correlated to how Bitcoin was when there was just too many coins and nothing to do with it, and people were buying pizzas because there was no utility yet; it hadn't gotten built out. So they were saying there was too many coins, too much emissions, and stuff coming out too fast, too early, and that could really hurt the project's health long term. So they put in this ramp up period to kind of help with that. Now, one other thing that they did was they bought back some of the investor coins, so that because the investors might have got in at like 28 cents, 50 cents, stuff like that, and they've already had a lot of returns, and they're most likely the ones to want to be able to dump and cash out. So they try to buy as many of those coins so that the people that are doing the validation, the ones that are getting the rewards, that are helping the network with verifications and stuff, don't get pretty much dumped on, from at least the investors. So let's kind of get into this. So this here is the tokenomics. This is the updated information that was brought out. And again, I do want to say I do understand both perspectives. All right, so the way they have it set up, there's a max supply of 200 million. They are projecting the GPU token to be at $2.50 at TGE. So token generation event. So when the coin launches, they expect it to be around that. And I also heard earlier today that it might be about $2. So somewhere between $2 and $2.50. The initial circling supply is going to be 7,086,000. initial market cap when it first launched is going to be 17,716,000. Now, when I saw this, I instantly got excited because I looked at this project. I'm like, I don't see how this project doesn't hit 100 million, which is highly likely because if you're not going to have a whole bunch of coins coming out, they call that with a low float or something like that, where you have a low circulating supply. So it can really jump up really quickly because the supply is so low. But again, that's only because it just launched. And that's another reason why people might want to dump, because the price is going to be so high because there's only a limited amount of coins. All right, so that kind of gives a summary of that part of the GPU coin when it first launches. Now, this is what they project for this year. Okay, this project is projected to launch within the next 2 to 3 months. They don't want to give a hard number, which I understand because people try to hold you to it. But about 2 months or so is what I'm anticipating for myself. Now, the way they did it is they made it very simple for people to understand. They pretty much sold 10% of the supply to VCs and stuff like that to raise money, and 90% goes to the blockchain. All right, now how does that look, this 90%? And this is where it talks about the team bought back tokens from early investors, hence team block not needed, because they used to have a certain amount on there for the team, but now they don't because the team pretty much bought back stuff from the investors. So now we're going to talk about the fundraising. So this is where the investors bought 10% of the supply. They bought them at 28 cents and 52 cents. Now the way it works is there's no cliff. So that means they're going to be able to start getting the coins right away. And it's a monthly vesting period, so for over a year. So they're going to get, every month they're going to get a percentage of their tokens till they're gone. So pretty much divided by 12. And they're going to get a release over this next year. Okay, so that's how that works. Now, how is the other 90% broken up? Now, the other 90% on the Gain chain is going to be 10% to liquidity. So that's like decentralized exchanges, different exchanges and stuff like that, where they can give coins on the exchange, provide GPU coins, and then they also have a certain amount of stable coins, and they can provide the trading. So you can have the trading online. So 10% of the tokens, so 20 million tokens is going to be for setting that up for liquidity for the token itself. Then you have 40% to the proof of stake, the POS. So this is, if you look at my last video, I kind of explained what the proof of stake is and what the proof of work is. So the validators and the queens, check the last video. I'll go ahead and post that here so that you can check it out, so you have a better understanding of what the validators and the queens do. But this essentially is showing that there is 80 million coins put aside for people that are queens and validators. So 40% of the supply is going to go to the people that are doing the verification of stuff and the staking. And the staking is exclusive to the people that own the licenses, the nodes. Then the other 40% is going to go to the apps or the dApps. These are called subnets as well. So these are pretty much, they could be very customizable. So you can look at them almost like, their own little system there, but they're pretty much like apps, but they're subnets, so they can be like their own little blockchain. And then you have people that are doing computation, so the hardware that is doing the proof of work stuff as well. So this would be almost like the GPU.net website having an app that does the Airbnb of GPUs. That's an example of a subnet of computation, things like that. Okay, so and that is another 80 million. So you have 80 million going to proof of work, which are the subnets, the kings, and the computation, the hardware. And then you have 40% going to the validators and queens. Okay, so we have that there. And this is where it talks about they're going to try to use the USDT, this liquidity, and they're going to try to go to 10 different chains. So, maybe Ethereum and Solana or 2 for sure, more than likely that they'll be on. And then maybe another 8, so that people can find a coin and trade the coin easily online. All right, so this here is talking about the circulating supply. This is, they're talking about the block rate. So now the block rate is based on how active the chain is. And this is where it talks about it ramping up, okay? This is that ramp up period. So as you can see, this is how people are going to get paid out. So they'll get 3%, 6%, 12%, 25% is doubling, and then 50%. It's going to keep doing that all the way until they get to where they were, all the way through this halving, where they cut rewards as well. Okay, so this shows that ramp up period. All right, and then lastly at the bottom here, it's talking about how that affects the circulating supply. So remember, you have a certain amount of coins. 2 million coins is for the test net, and then you're going to have an airdrop of all the people that have nodes. They're going to get 533. So that's how some of the coins are also going to come out. Okay, so that's pretty much the new tokenomics. You see the ramp up period. Now my little final thoughts are, I get it. I understand. But I see both sides. I also understand the frustration of when you felt like you had a plan and you were kind of counting how many coins you were going to get and how you're going to make your profits and how you're going to dump the coin, and then things changed. Now, I've been in other projects where they totally changed the tokenomics to a degree where, I bought the coin at XYZ and they end up switching it all. That wasn't the case here. They did change the emissions, but they did buy coins from VCs to try to help, where people won't get dumped on. But I really think they're doing it for good reason. I personally, the fact that they're giving an airdrop of 533 coins per license kind of shows the integrity. Also, they did this thing where if people bought like 5 licenses and more, they kind of kept scaling. They were giving them USDT, so pretty much giving them cash back. So a team that's trying to just do it for their own purposes, they wouldn't have done that. They didn't have to do that. This was after the fact that some of that stuff was already sold in terms of when they gave the USDT to people that had licenses. So that's how I look at it. So I get it. I think overall, if you're in it for the long term, it doesn't necessarily bother you as much unless you were at least trying to get your initial investment back. So to me, it's not as bad personally, but everybody, I can't speak for everybody. Everybody made decisions based on the information they had. But anytime you're dealing with technology, things change. Every time you are dealing with projects that are pretty up startups, they might make some adjustments. I don't really see this one as bad of an adjustment, but again, that's my personal perspective. I get it. I try to see things from both sides. So what do you think? Did you see something in these numbers that I should be aware of? Were you one of the individuals that really had an issue with how everything was rolled out? What are your thoughts? What are your opinions about the project? I personally love the project. I think it's phenomenal. I love the website. I said that on my last video. As soon as the project launches at TGE, the rewards are going to double. Right now, per node, without any like bonuses, you're getting like 0.25 per day. So if you have 2 nodes, you're getting 0.5 per day, you know, and you can put that with your queen that's getting about 200%. Now those rewards are going to double, you know, because the first at launch, right now we're in a test net, but at launch they plan on going ahead and doubling. So you're working at the first double. So that 0.25 per node is going to go to 0.5. And if you have 2 nodes, it's going to go to pretty much 1 GPU per day. So those are per day numbers so far, you know. So that's my little breakdown. That's me talking out loud on what I personally saw. And I'm excited personally. I was calculating that I thought this project was going to at least be 100 million, and that's $27 coin. So if you're launching, you're getting $27 per day. You know, it's not too bad to me personally. But I mean, and that's not even where it's getting its full payouts and stuff. So I'm thinking long term, you know, and just yeah, this is not investment advice. Do your own research. I'm just showing what I see from my own eyes. So do your own research, not investment advice. This is for educational purposes and entertainment purposes. That's what they always tell you to say, right? So thank you for taking your time. I am your Polkadot Specialist Vol. Please like and subscribe. Have a beautiful day. God bless.